So let's start bank audit. So this we will discuss only from the main material. You can even look at smart notes as well, no problem. But just one chapter you will understand how to read from the main material. Always day before exam, if I have a short notes, I can finish faster. That kind of assumption is not correct. Nothing such. You must know how to filter that. In order to let you to have that kind of exercise, how we filter this, you see. Getting it? We will discuss the entire point, but still we will not read the entire book. Getting it? No. So first of all, how to do audit of a bank? What is a bank audit? Bank is first of all a company. It's a company registered under Companies Act. Only thing is they are in the business of banking. The business nature is what? Banking. Financial banking. Getting it? Again, blood bank, power bank, all this will come. Getting it? So bank means what? Something where we can store. Bank means a storage unit. That's called a bank. Kiddie bank. Yes or no? So banking is a company registered under Companies Act, which has got license from RBI as per Banking Regulation Act. Now, for this banks, there is a big regulatory, a strict supervision from RBI. Getting it? Even the appointment of auditor of bank is not that easy. First of all, in order to become the auditor of a bank, you must have certain eligibility requirements. You must have certain eligibility requirements. Suppose RBI has, for banks, the auditors are broadly two types: statutory central auditors and simply statutory auditors. When we say statutory auditor, it is branch auditor. Statutory central auditor means main auditor. We can also call him as principal auditor. His report is what we will send to public. Generally, for a company, in order to become an auditor, what is the qualification? You must be a chartered accountant having COP. For bank, not just that. The qualification, eligibility criteria for banks is much very complicated. Somewhere in April 2021, RBI has given directions regarding eligibility criteria for auditors in order to be appointed as statutory central auditor for banks. Roughly I'll tell you, I'm not giving accurate picture, but roughly I'll tell you, the firm should have minimum 15 plus years in the existence. The partners must have continuous, one partner at least must be associated with the firm for minimum 15 years. Another two partners must be associated with the firm for minimum 10 years. Another two partners must be associated with the firm minimum for 5 years. There must be total 7 full-time CS associated with the firm. Able to understand? Out of them, one partner or two partners must have minimum, one partner should have DISA qualification. Out of that, again, one partner should have been working in the financial sector, conducting audit of financial entities from past 10 years. Likewise, there is a criteria. I'm not exactly sure about the criteria, but there is a criteria like this much strict. Now in India, how many audit firms will meet with that criteria? Hardly 100 or 150 will be there. Out of 3,000-4,000 audit firms that are there, not even 3-4, more than 10,000 firms were there. More than 10,000. It's big number only. It's not small number. Hardly 150 firms only meet with that criteria. And only out of them, 10 or 12 will be selected for bank audits by State Bank of India. Able to understand, all of you? So it's not that easy to satisfy in order to get allocation for bank audit. And further remember, in case of nationalized bank, directly C&AG will appoint the auditor, especially for State Bank of India. Remaining nationalized banks only will appoint directly, not even members' approval. Bank directors can appoint, but prior approval of RBI is required regarding the auditor. In case of private sector banks, board of directors will recommend, members will appoint, but before board of directors make a recommendation, prior approval of RBI is required. This is the main provision. Now the auditors of a bank will also give same audit report, 700 format. Same principles apply, but CARO do not apply. And bank auditors have to give additional report called long form audit report. Now in this bank, the major point in our subject is, in this particular chapter, is how to do audit of advances. What are various NPA norms for advances? This is one typical topic. How to calculate drawing power. In the last exam, they asked the calculation of drawing power question. Getting it? All that we are going to learn. There are various types of banks: commercial banks, regional rural banks, cooperative banks, payment banks. Payment banks are those where you can save little amount of deposit. Payment banks are those where you can save little amount of deposit. There is a maximum limit up to which these banks will accept deposits. And development banks, small finance banks. Getting it? Now, Reserve Bank of India is the one which is entire functioning of the banking industry is regulated by RBI. So RBI is responsible for development and supervision of Indian financial system, the monetary credit policies, all that. The functions are currency issuance, regulation of currency, banker to government, banker to various types of banks, and regulating the activities of various banks. And remember, in India, no bank can commence business or open new branches without getting license. Further, bank operations can be conducted only at branches. Only at branches. So in compliance with regulatory impositions, generally accepted accounting principles, all that. Now the bank's head offices, controlling officers must contain delegation of powers, accountability. They should delegate the powers to people, all that. They should recruit and delegate the powers to the CEO, managing director, directors, like that. They should lay down their own policies. And all these policies that are being laid down must be in compliance with RBI. Next, regulatory framework. What are the laws and regulations that are applicable to banks? RBI Act, Banking Regulation, Companies Act, Acquisition and Transfer of Undertaking, RRB Act, and Acquisition and Transfer of Undertaking 1980, 1970, any one you can remember. IT Act, PMLA, Prevention of Money Laundering Act, SURFACE. This is called SURFACE, Securitization and Reconstruction of Financial Assets and Enforcement of Security Act, Credit Information Companies Act, Payments Act. These are only few. National Payment Settlement System, there are various acts also regarding that. In this, any 5 you have to write in exam, if at all regulatory framework question comes. In the above, they may ask you question on write about banking operations. 3 marks question they can ask, only this. Getting it? Next. Now, so still we have little more to, so much else to discuss. We'll take few minutes gap, and then we'll let us finish this bank audit chapter. So today we will finish, in this session itself, we will finish bank audit chapter fully. Getting it? Yeah. So the continuation. So what are the central statutory auditor or statutory central auditor in case of a bank has to furnish reports along with audit report? See, the bank main auditor has to give audit report, right? That is common requirement that we know. But in addition to that, there are few other reports which the central auditor has to give. So what are they? So central auditor has to give a report on adequacy and operating effectiveness of controls over financial reporting. This is called IFC reporting, 143 subsection 3 clause I, that requirement. This do not apply for one person company, a small company and a private company whose turnover is less than 50 crore and borrowings less than 25 crore. Remember? Yeah. And the central statutory auditor shall also submit long form audit report. We shall submit a report on compliance with SLR requirement. We shall submit a report on whether IRAC norms and provisioning norms are issued by RBI are satisfied. IRAC means income recognition, asset classification. Income recognition and asset classification norms, are they satisfied or not? You have to give a report. And we have to give a report on any serious irregularities that were noticed in working of the bank which require immediate attention. And we need to give a report on adverse credit deposit ratios, especially in rural areas. These are the reports which we have to file with RBI. This can be asked as a 4 marks question. What are the reports that central statutory auditors furnish in case of audit of banks? Now, what is bank accounting system? The banks are broadly categorized into 3 parts: non-computerized banks, or partially computerized, or fully computerized. Nowadays, you can only find fully computerized banks. So, fully computerized banks will have core banking solutions software. They will be implementing core banking solution software. It is something like anywhere, anytime banking. Getting it? Now with core banking solution, if a bank is having core banking solution, even though you're having account in Hyderabad, you can operate that account by visiting the branch in the Chennai. Getting it? So any transaction of a branch customer can execute the transaction anywhere else. A customer of one branch can execute the transaction in any branch of the bank. So in computerized environment, it is very important, imperative, necessary that auditor is familiar with parameters as per latest RBI and see that they were built into the system. Then auditor should not go by assumption that system generated information is correct, can be relied upon without evidence that demonstrate the systems are meeting with the parameters. So he should use skepticism, prudence. Whenever he feels something manually needs to be checked to check the authenticity and consistency of the transaction. Remember, just because loan is granted, system will collect the loan, EMI recovery, everything is fine. Loan is collected on time by the computer. Computer will debit the customer account on time. Just because everything is fine, doesn't think the loans given by the banks are proper. First of all, you need to check based on what documentation bank is giving loan. How credit worthiness is being assessed. Able to understand? Just because computer controls are perfect, don't think the financial statements are completely true and fair. What is the difference between computerized branch and non-computerized branch? There is a possibility of this question. All bank activities are done through computer. They are done manually. Anywhere, anytime, only in working hours. Shortest time, longest time. More productivity, more efficiency. Less productivity, less efficiency. Able to understand? Now, what are the points to be kept in mind while drawing audit plan of a bank? If they ask you specifically audit plan of a bank, you need to write this point. What are the points to be kept in mind while drawing audit plan? You need to write SA 300 points. Audit strategy planning chapter is there, that points you have to write. But if they use the word bank, you should write these points. So what points? Level of operations, features, compliance based on previous reports, audit risk based inadequacy or breach of controls, all that. Like what are all the breaches that bank identified? All these points you should keep in mind before you draft an audit plan. Then we have important topics we will discuss. Now, provisions relating to appointment of auditors in case of a bank. For all regional rural banks, board of directors of the bank will appoint with the approval of central government. But for SBI, C&AG will apply by consulting with the central government. However, the subsidiaries of SBI were there, right? For them, the auditor will be appointed by SBI itself. In case of remaining nationalized banks other than SBI, board of directors will appoint subject to approval from RBI. Whereas remaining banking companies, remaining means what? Other than nationalized means private banks, appointed by shareholders at AGM. Here also, Reserve Bank of India approval is required. Are you clear? Remuneration. In case of nationalized banks, SBI, RRBs, it will be fixed by Reserve Bank of India. Whereas in case of remaining banks, it is fixed as per 142 section. Fixed by shareholders or the manner fixed by the shareholders. That's it. Now, what auditor has to report in case of a bank? First of all, format of audit report is similar to standards. We will comply with SA 700 format. We will give additional disclosures. The central auditor shall give additional disclosures about unaudited branches number. What central auditor shall give? Unaudited branches number. Not only that, even quantification shall also be given. If you recollected, I showed you other matter paragraph of SBI. 16,000 branches were not audited, whose deposits are 35%, whose advances are 25, whose interest income is 25, whose expenditure is 20, like that percentages. Quantification is also important, understood or not. So quantification of advances, quantification of deposits, quantification of interest income, quantification of interest expenditure, that should also be given. Not only unaudited branches details. How far these unaudited branches account for in total advances, total deposits, total interest, total expenditure. Clear or not? Next. Now, whatever matters 143 section says, checklist items, all those matters apply. And for what about Caro? That is not applicable. Now, next. In addition to that, in case of nationalized bank, the auditor shall make a report to government, in which he shall make the following. So this is also part of audit report only. In case of nationalized bank, audit report will be addressed to whom? Central government. So we will put the president, to the president, whether the balance sheet and profit and loss account contains all particulars so as to exhibit true and fair view. Whether he has been given any explanation or information requested, is it satisfactory? Whether transactions of the bank are within the powers of the bank. Whether returns means a summary received from offices and branches have been found adequate for the purpose of audit. Similar to 143 items. We have seen similar points in society's audit. Same points we have seen in company audit. Able to understand? Hey, what happened, man? These are the points which you have to report, positive or negative. This itself can be asked as a 4 marks question. In case of nationalized bank, the auditor has to address the report to the central government. What are the points that auditor shall cover in the audit report? They'll ask you 4 marks, all the 4 points you have to write. Whether profit and loss account balance sheet contains all particulars and are giving true and fair view. Whether explanation information you asked for is given by the bank or not. Whether transactions are within the powers of the bank. Have you received branch returns and office returns? Whatever is necessary for the purpose of audit. Getting it? Next, in case of banks, LFAR report shall also be given. This is called as LFAR report, long form audit report. It has to be submitted by auditors by 30th June every year. Getting it? So, in order to submit by auditor, central auditor by 30th June with RBI, central auditor should get branch LFAR much before. Getting it? Then he will consolidate and then file with RBI. So, the terms of appointment in case of public sector bank, private bank, foreign bank, nothing but all banks require auditors to furnish a long form audit report. All banks, the auditors have to give LFAR. The matters, sir, what will be there in this long form audit report? That matters will be specified by RBI. We need to ensure timely filing of LFAR, proper planning is required. While format of LFAR does not require executive summary, members may consider providing a summary. Like in LFAR, there is no summary requirement and all. But if you want to give summary of observations in LFAR, you can give a summary. Getting it? Then reporting of fraud. The auditor of a bank has to give a report to RBI in case if you find an act of excess power, or if you smell any foul play, or if you find any fraudulent activity, or if you suspect any fraud, you need to immediately report to RBI. This requirement not only applicable for stat auditor, but also applicable for internal auditor. This is as per circular given by RBI. Able to understand? But remember, it does not mean you are expected to look into each and every transaction, but look at the system as a whole. While performing your duties, if you come across any instance, please report the matter to RBI in addition to those charged with governance of the bank. Are you clear? The bank auditor also has duty to report on fraud. 143 subsection 12. So you have duty to report on fraud, which is same as company auditor. Now the actual discussion which is important in banking is from question number 14. So write about audit of advances of a bank. Advances means what? Advances constitute what? Funded advances, non-funded advances. Suppose bank gave a guarantee on behalf of customer to some supplier. The supplier sent the goods to the customer. Customer paid money later, no problem. But here I gave a guarantee, no. That is called non-funded advance. What is that guarantee is called as? Non-funded. Non-funded means because of giving guarantee, is there any outflow of cash? No. What is funded? Customer approached me for term loan and I dispersed the loan also. Outflow is there, right? That is called as what? Funded loan, funded advance. Funded loans are the one where there is actual transfer of funds. Non-funded are the one which do not involve transfers. Now, what these advances generally comprises, it may be term loan, cash credit, OD, bills, risk sharing basis participation, interest bearing staff loans. Next, The bank has to disclose advances in the balance sheet as below. Bills purchased how much, cash credit OD how much, loans repayable on demand how much, term loans how much. And these advances shall be further described into out of them how much is guaranteed by security, out of which how much is guaranteed by guarantee, and what is the unsecured portion. Further you should show breakup. How much advances were given in India, how much advances were given outside India. Within India, again you should show how much advances loans are given to priority sector. Priority means agriculture loan, housing loan, MSME loans. These are all comes under priority sector. How much loan is given for public sector, banks and others. Now how much amount you need to receive from other banks, how much amount you need to receive from others, bills, syndicated loans, others. What is syndicated loans, consortium loans? I will discuss that later. Getting it, all of you? Next. Now, when verifying audit of advances, auditor has to verify large advances 100%. Recommendation is what? Auditor should verify 100% verification of large advances. Whatever auditor feels it is big advance, we have to verify 100%. Remaining advances, we can verify on a sample basis. The auditor should examine all large advances, whereas other advances may be examined on sampling basis. What is a large advance? Large advance is an advance where if the year-end outstanding balance is in excess of 2 crore or 5% of the aggregate year-end advances, whichever is less. Maximum how much is there, it is treated as large advance? 2 crore. If at all the outstanding loan is 2 crore for a customer, it is straight away large. Or if it is 5% of my total outstanding loans, then also it is treated as large. Suppose my total loans, mine is a small rural branch. My total loans itself is 10 crore. 5% of 10 crore means what? 50 lakhs. In my branch, any loan which is having more than 50 lakhs outstanding amount is a large advance. Suppose my branch is in a very big cosmopolitan city where the total loans are 1000 crore. 5% means 50. 2 crore itself is treated as large advance. They'll give you MCQ on this. Able to understand? Large advances we will verify generally 100%. Small advances we apply sampling. Next. The loans are broadly divided into, see, banks will give loan based on two conditions. One, they will look at your repayment capacity. Two, they will look at the security that you are offering. Getting it? Based on repayment capacity, if at all you have repayment capacity, then only application will go further. And then, in order to disperse the loan, they will ask for some security. Are you getting the point? You might have seen this kind of, comments. Why education loans are having highest rate of interest? You might have seen comparing Vijay Mallya post and all. For manufacturing beer, the bank is giving at rate of interest 8%. For education, the bank is charging 17%. Why this partiality? Banks are not charging lower rate of interest because they are doing business, because they offered security. Education loan is highly risky loan. The recovery rate is very low. Getting the point? Iva padichi pass aayittu job vandittu appuram repay pannanum. So the person who has granted education loan has to finish studies, secure a job, get a salary decently, then he should pay. Able to understand? Only then bank will collect. So that's why risk is high, rate of interest is high. Unsecured loans, rate of interest is high. Very simple. Secured loan, rate of interest is low. Housing loan, rate of interest is 7%. Car loan, rate of interest is 8 and of 9%. Because the secured, if the customer do not repay, I'll sell the house, I'll sell the car at least and recover the money. Able to understand? Now, you are giving security to a bank, right? Whatever the security you are giving, that's called primary security. What is it called as? Primary security. Sometimes, if at all the bank thinks the primary security that you are ready to offer, if it has high value fluctuations, banker is not able to satisfy with primary security. He will ask for not second security but collateral security. Collateral means what? If the primary security fails to discharge my liability, then I will come and touch your secondary security, that is collateral. Suppose to buy a house, I offered my land plus another land too. Two lands I offered as security and got a housing loan. Both are primary only. Getting the point? Suppose I offered land, this is primary security. If at all this land value was low at the time when I default, if at all, and at the time the value was low, then take my land as second one. This is collateral security. So only if this land do not give, then go for this. Whereas primary means what? Both the lands are primary security. Able to understand? Next. What are the most common type of security that is offered to the bank in order to get a loan? Goods, stock, debtors, trade receivable, nothing but current assets. We have seen this point in Tata Motors for getting working capital loan. Gold ornaments, immovable property, plantations, insurance policies, securities, all these can be offered as an asset security. Now, how do banks create security? In case of immovable property, we call it as mortgage. Mortgage is of two types: equitable mortgage, registered mortgage. Equitable mortgage is something pawnbrokers do. Have you heard of pawnbrokers, PAWN? What they do? They take some property and then give you loan. Some pawnbrokers or some lenders, in an unorganized sector lenders, how do they give loan? They take your house documents. Only physical documents they'll take. And they'll take PN, promissory note. And they'll give you loan. Here, is the mortgage registered on my name? This is equitable mortgage, which is risky. Registered mortgage, how banks will give housing loan? The housing loan documents will be registered in the name of bank. Under mortgage, there will be a mortgage deed. Getting it? If there is a mortgage deed, in the sub-register office on this house property, mortgage is created. The borrower cannot sell the house without release of mortgage. What's the difference between registered mortgage, equitable mortgage? What happens? In equitable mortgage, I gave my house property documents to lender and got loan. I go to register, I will put a document, application that I lost my house documents. Registrar will give me new house documents after following some procedure. I will sell my house. And the person who lent me, he is still thinking that house is in my hands. That's equitable mortgage. That is dangerous. Equitable mortgage is affected by mere delivery of title deeds with an intention to create security. Whereas registered mortgage deed will be there. Both the parties will sign. It is registered with the registrar office as well. Understood or not? Pledge. Gold loan is best example of pledge, where you deliver the goods and take the loan. After you repay the loan, take back your gold. So this is called pledge. Hypothecation, car loan, bike loan, current assets loan, working capital loan, these all will be given under hypothecation. Hypothecation means what? I will have ownership on the goods until you repay. Once you repay full loan, I will release the ownership. Only after I release the ownership, you can sell it. Current assets, there the ownership is on the go down premises, like on the stock, but the stock is continuously moving. Able to understand? Here the loan is given based on stock statement. Current assets statements, which is signed by some auditor. Able to understand? Next, assignment. Assignment means what? Example, assignment of life insurance policy. Assignment means assignment of life insurance policy. It represents a transfer of existing or future debt or right or property belongs to a person in another person. Only actionable claims are accepted by a bank by way of security. Like actionable claim means what? Where I have right to recover some money at a future date. Getting it? LIC policy is an actionable claim. Maturity amount is an actionable claim. Where through by enforcement under law you can receive that money. You can actionable means what? Enforceable under law. Now, I have LIC policy. Right now, if I surrender, it will fetch me 30 lakhs money, example. But I want suddenly money, but I don't want to surrender because I have so many benefits after 5 years. I went to a bank. Please take this LIC bond and take this assignment deed. I took this deed from company and I'm giving it to you. You register with the company, insurance company. Give me 20 lakhs loan. Banker gave me. Only after I repay this loan, assignment deed he will release. He will give me NOC. Then if I go and submit that NOC to insurance company, they will give me maturity money. Otherwise, they will not give me maturity money. Because the policy is assigned in the name of bank. Set off. Set off means what? See, as a student, you will not be getting credit card. Correct? But there is one way to get a credit card. Suppose if you have some money, some 1.5, 2 lakhs money, if you take from parents or whatever, you go and deposit with a bank, fixed deposit. 2 lakhs you deposit with SBA and now ask credit card. By keeping the deposit as security, they'll give you credit card. They'll give you 1.5 lakh limit. Now you use the entire 1.5 lakh limit and you're not paying. What banker will do? You made a deposit, no? And they gave you a loan, right? They'll set off both. Are you getting the point? Set off means what? To combine two accounts. One is a deposit account, another one is loan account of the same person. Provided both the accounts are in the same name and the same right. The capacity of the account holder in both accounts should be same. What is account capacity means? What is same capacity? Suppose I have got credit card, but it's actually an add-on card of my relative or my friend. My friend is original account credit card holder. He gave me another credit card. Just add-on card. Additional card can be added. Getting it? Now I am using that card. I am swiping it. I am using it. Add-on card is in my name only. But primary holder is what? My friend. I am only a user. That is not in my name. Now I have a deposit in the bank. My friend not repaying. In fact, it is me. I have not repaid. But primary holder is who? My friend. Now can a bank apply set off? They can't. Because deposit is mine. This card is him. Just because I am using, it is not used in my right. Able to understand? Lien is not required. All of you understood or not? Next. NPA norms in case of a bank. See, NPA norms here has been discussed separately for term loan. NPA norm for overdraft and cash credit is different. NPA norm in case of bill purchased and discounted is different. In case of term loans, the norm is slightly different. OD and cash credit is different. And even bills purchased, it is different. Let's look at the first and third point. Suppose I took a term loan. Term loan means what? Where the duration of the loan is a particular term. And I will be repaying every month some interest or installment. So that is a term loan where I will repay after a particular period of time. Suppose if the interest or installment, if it is remaining overdue. Overdue means what? Cross due date. Cross due date and overdue for more than 90 days in respect of a term loan. A term loan will be treated as NPA if it is overdue for more than 90 days. Are you getting the point? Same way, bank purchased a bill and after discounting, money is given to the drawer. The drawer, whoever accepted the bill, that fellow did not pay after the bill maturity date. Still 90 days over. Bill is matured 90 days back. On the 91st day, the bill whatever bank discounted, the drawee account is treated as NPA. Which means, in case of term loans and bills purchased, the criteria is overdue for more than 90 days. Now, when cash credit and overdraft, will be treated as NPA if it remains out of order. A cash credit and overdraft is treated as NPA if it remains out of order. What do you mean by out of order? The outstanding balance in the OD account, outstanding balance in the cash credit account in excess of sanctioned limit and drawing power. It is in excess of sanctioned limit and drawing power. Now, what is sanctioned limit? What is drawing power is a question. Based upon your repayment capacity, sanction limit is fixed. If you can repay up to 1 crore, you will be given 1 crore loan. You will be sanctioned 1 crore loan. But I told you, based on repayment, I will not give loan. I want security as well. Suppose you want working capital loan. Based on your turnover, based on your profit, based on your scale of operations, I gave you 10 crore sanction limit. To your company, how much is sanctioned working capital loan? 10 crore. But you gave me current asset statement, which is certified by a CA. The statement shows only 8 crore. The statement shows the stock balance of only 8 crore. This is your own stock. Out of this 8 crore, I will keep some 30% margin. There is no guarantee that always 8 crore worth of stock there in the godown, no. So I will look at your analysis, stock consumption analysis, 30% margin I kept. Approximately 5 crore I gave you drawing power. Which means I gave you working capital loan sanction, right? 10 crores. But can you draw 10 crores? You can draw only up to 5 crores because the power given to you only up to draw 5 crore. This is drawing power. Suppose your drawing power is 5 crore and your sanction limit is 10 crore. Suppose you have withdrawn for more than 5 crores or more than 10 crores. If the outstanding amount in a cash credit, outstanding amount in a cash credit or overdraft, if it is more than the drawing power allocated to a customer, that account shall be immediately treated as. Now you may get a doubt. Sir, if a customer is given drawing power 5, he can only withdraw up to 5, right? How come he withdraw more than 5? Getting the point. Suppose last time, 2 months before, I gave you 6 crores approval, drawing power. At that time, your stock statement is showing 9 crore. You withdraw an entire 6 crore. Now, I sent a stock auditor to conduct stock audit. A stock auditor came and conducted and certified that it is only 7 crore. Total stock. Now, immediately in my system, I revised my drawing power to 4 crore. Right now, customer is having outstanding amount more than revised drawing power. It should be treated as NPA straight away. The moment it is treated as NPA, please recover. Please recover as soon as possible. If the customer paid, realizing that stock value is low, customer paid the money, I will again treat it as a regular account. Are you clear? So, if outstanding balance is crossing sanctioned limit drawing power, we will treat it as NPA. Or outstanding balance is less than sanctioned limit drawing power, but no credits continuously for 90 days on the date of balance sheet. As on 31st March, customer is having outstanding amount. He withdrawn less than 5 crore. 5 crore is drawing power, 10 crore is sanctioned, but withdrawn how much less than 5 crore outstanding. But he withdrawn 90 days before. He should pay within 90 days, no? Overdue for more than how many? 90 days. Continuously 90 days, customer did not pay single rupee as on balance sheet date. We will treat it as NPA. We will treat it as what? That's why, what is better treatment, in case of OD cash credit? Pay first and withdraw again. Best. Able to understand? Or, credits are there. Customer is repaying OD and all. But it is not enough to cover interest itself. Bank is, customer withdrawn 5 crore. In the entire 1 year, bank debited to that OD account 75 lakhs interest. Customer did not pay, hardly credited 50 lakhs. That is not even enough to cover interest. Then also it is treated as out of order. What is difference between OD and cash credit? OD means your current account has 10 lakhs. I will give you permission to withdraw up to 12 lakhs. Over and above your balance, you can draw, overdraft. Cash credit means it's a separate facility. I'll give you a separate account for withdrawing loan. That's a separate facility. That's a basic difference between OD and cash credit. And OD and cash credit will become NPA when? If it is out of order. Term loan will become NPA when? Interest or installment overdue for more than 90 days. Bills purchased or discounted will become NPA if the amount is overdue for more than 90 days. Are you clear? Now, remember, NPA classification should be based on record of recovery. Availability of security is not to be taken into account. What do you mean by that? I gave a car loan. Car value is 25 lakhs. I gave only 15 lakhs loan. The EMI was 25,000. Customer defaulted. More than 3 months over. 90 days crossed. I should straight away treat it as NPA. Sir, car is already there. No. We can recover and sell. No. Why should I treat it as NPA? No, you should not argue. Security there or not doesn't matter. Customer has took a loan and he is not repaying. 90 days crossed. That's it. Treat it as NPA. It should be based on recovery only. NPA criteria should be applied based on recovery. Non-recovery means non-performance. That's it. Security is there, high value is there, safety margin is so much. Ignore all that facts. Are you clear? However, in case of central government guaranteed advances, in case of central government guaranteed loans and advances given by the bank, even though the customer is not paying more than 90 days, we will not apply NPA norm. We will not apply NPA norm because government has given guarantee. Damn sure I will get from the government. Are you getting the point? In case of loans and advances given by keeping security of term deposit, National Savings Certificate, Kisan Vikas Patra, Indra Vikas Patra, based on these patras, if I give loan and that loan was defaulted more than 90 days over, I will not treat it as NPA. These two are exceptions. These two are exceptions. Are you getting the point? As long as margin is there in the security, I will not treat it as NPA. Are you getting the point? Anyhow, once again I will get below. There once again I will discuss in detail. And further, once an account of a customer in my bank is treated as NPA, all his loan accounts in the same bank shall also be treated as. So asset classification will be borrower wise but not facility wise. That's it. All of you understood. They have given an example here. So when do a overdraft or cash credit is treated as NPA? Now, what do you mean by overdue? Any amount due to the bank, if it is not paid on the due date, the facility is treated as overdue. What is the provisioning norm? Once it is become an NPA, first 12 months it is treated as substandard. 15% provision you keep it, whether secured or unsecured doesn't matter. Once if it crossed 12 months, after it is classified as substandard, crossed 12 months, up to next 1 year, secured portion 25, unsecured portion 100, up to 3 years, increase it to 40 and 100, more than 3 years, 100% you make provision. And once you treat it as loss asset, that's it, customer will not pay. Write it off completely at 100. Later you sell the asset, recover, right? Recovery of NPA, what to do later we will discuss. Clear? Next. Now the next one is special NPA norms. So special NPA norms is also an important question. Special NPA norms. Once we discuss special NPA norms, we have question on drawing power calculation, all that. So I'll do one thing. Before this, I'll discuss drawing power calculation, all that. Then we will discuss special NPA norms. Then we'll discuss how to do audit of advances. Then how to do audit of incomes. That's it. Bank audit chapter will be closed. Are you all clear until now? That's it. So let's continue. So how to compute drawing power? How to compute drawing power? First of all, what is drawing power? Drawing power is generally addressed as DP and is important concept for cash credit facility which is getting from banks and FIs. So drawing power is the limit up to which a firm or company can withdraw. What is sanction limit? It is a total exposure that a bank can take upon a particular client for OD, export packing credit, non-funded exposure, etc. Drawing power is amount calculated on security less margin. What is the value of the security minus margin they will give? Bank will give margin for price fluctuations of the asset. Now, what is the rule? What is the drawing power and sanction limit rules? They'll ask you, write a short note on drawing power and rules for drawing power. They'll ask you this question for 4 marks straight away. What are the rules for drawing power? All accounts should be kept within both drawing power and sanctioned limit at all times. The moment if the outstanding balance exceeds sanction limit, it is treated as irregular and shall be brought to the notice of the management. And drawing power is to be required based on latest stock statement. It should not be older than 3 months. The outstanding in the account based on drawing power drawing power which is calculated from stock statement which is older than 3 months. It is also treated as irregular, NPA. If at all customer has withdrawn money, customer has submitted stock statement 3 months ago. Now latest stock statement is not yet submitted. Then the account is treated as irregular. That loan account is treated as irregular. Now how drawing power has to be calculated? So below they have given, you see. Suppose the client is having right now in the go down 1000 rupees worth of stock. Out of which 300 rupees worth of amount is not yet paid to supplier. So primary right is with whom? Supplier. That is not my stock. Same way, another 300 rupees worth of stock I obtained through a guarantee from another company or another bank. So LOC, which means what is my own stock value? 400. Now margin, bank will keep 25% margin, no? So some 100 margin. So only 300 drawing power bank will give you, which means bank will give you loan amount only based on your own stock, not based on your credit purchased stock. Are you clear? Same way, total debtors 1000, ineligible means provision doubtful something. So 800. Bank is creating 40% margin. So net amount that bank can give is 480. Totally how much drawing power? 780. This question amounts are slightly different but was asked in the recent exam for 5 marks. May exam. Are you getting it? Next. So what auditor has to check? Auditor has to check the stock statements, quarterly returns, everything you must scrutinize. Annual reports submitted by borrower should be verified. Monthly statements for respective months should be verified and should be compared with the previous month and identify reasons. Especially if the funded exposure is more than 5 crore, means total amount to disbursed to a customer is more than 5 crore. Stock audit must be conducted by bank. Auditor can also advise stock audit in some other cases if you think it is important. Branches should obtain stock audit report from lead bank in case of consortium working capital. That we will discuss later. What is consortium? All that. The report submitted by stock auditor should be reviewed during the course of audit and special focus should be given for comments made by stock auditor regarding valuation of stock, all that. That's it. So this is the point. What are the audit requirements related to stock audit? 3 marks question they can ask. Able to understand how a different question can come. Next. So audit of advances is also easy. Audit of advances is an easy point. I'll come to that later. First, special NPA norms. What are special NPA norms? What is the NPA norm that we discussed actually? A term loan will become NPA if the amount is overdue for more than 90 days. A cash credit or overdraft will become NPA if it is out of order. A bill purchased or discounted is NPA if it is overdue for more than 90 days. Same logic. Now, these are some loans. In this only important points I'll cover. Government guaranteed advance I'll cover. Advances under consortium I'll explain. Accounts where borrower that I'll explain. And advances affected by natural calamities, agricultural advances. These points I'll explain. Getting it? Now, what is the treatment for government guaranteed advance? Generally, if I gave a term loan, government also gave a guarantee. Which government? Central government, not state government. Central government gave a guarantee. And this customer defaulted. 90 days over. Generally, what will I do? I will treat it as NPA. But since central government guarantee is there, I will not treat it as, it will be still classified as standard asset, but treated as NPA for income recognition purpose. What is meant by that? See, generally, if there is a overdue in the term loan more than 90 days, I will treat it as NPA. Interest income I will not recognize. I will create provision on the asset loan. Correct? This is what consequence of NPA. Once a loan is treated as NPA, what are the consequences? On that loan, we will classify it as substandard, create 15% provision, and on that loan, some interest is accrued, right? That I will reverse because it is not realized. And will I recognize further interest on accrual basis? No. NPA loan interest shall be recognized on cash basis. You might have understood. That's what. Suppose if government guarantee is there, loan amount, I will not treat it as NPA. If I do not treat it as NPA, will I have to create provision for substandard category like that? No. What about interest? That I will not recognize. From interest point of view, I will treat it as NPA. Are you getting it? But loan point of view, I will not classify that as NPA. I will not create a provision. Understood or not? Suppose if it is term deposit, national savings certificate, Kisan Vikas Patra, Indra Vikas Patra, even interest is not treated as NPA. Even though customer defaulted, still the bank will recognize interest on accrual basis as long as margin is available. So that is a treatment. Getting it? Next. This video will be there in YouTube. Later you once again watch. Bank audit video will be uploaded. I told right, out of 25-28 hours which I took, around 26 it will come effectively net recording. 25 to 26, 12 I will upload on YouTube. So you can watch again and again them. Getting it? Next. So in other words, provisioning norm do not apply and interest is recognized only when it is realized. This relaxation is not applicable in case of state government guaranteed advances. Understood or not? Now what do you mean by advances under consortium? Consortium means, see, every bank has to maintain liquidity ratio. Every bank has to maintain some liquidity ratio. Deposit advance ratio they need to maintain. Now, that is called as credit deposit ratio. It should not be adverse. If at all credit deposit ratio is adverse, credit means loans given. Deposit means customer how much amount accepted. And after SLR, after CRR, you have to maintain little more liquidity. Only balance fund can be given as a loan. Able to understand? Now, a customer approached me, a big customer approached me. Suppose Tesla is planning to incorporate in India. Let us assume now they stop the plan. Let us assume in future they want to. They want 2 lakh crore loan. They want 2 lakh crore worth of loan for which they are offering their factory situated in United States worth of 10 lakh crore as security. Getting it? They have a factory in United States. 10 lakh crore is the value of the security that they are offering. Just to give 2 lakh crore. And repayment capacity, past track record, everything is excellent. Literally speaking, they are eligible for 5 lakh crore. But they are only asking me go 2 lakh crore. But the problem is, my bank cannot give 2 lakh crore. Because I have liquidity norms to be maintained. I have so many problems in order to give 2 lakh crore. But your amount, your loan application is worthy eligible. What will I do? I'll give you 2 lakh crores, but from my pocket I'll give you 50,000 crore. On your behalf, I will go and talk to remaining banks. And all of us will form as a syndicate and give you totally 2 lakh crore. This is called consortium arrangement. This is called syndicated loans. So I'm SBI. I went to ICICI Bank. I went to HDFC Bank. I went to Indian Overseas Bank, or I went to some, syndicate bank. Getting it? I went to all of them, and all of us together we gave 2 lakh crore to the Tesla company. Now here, I am the leader. I am the lead bank. Who took lead for this entire project, entire loan? SBI. SBI is called as lead bank. These are called as member banks or simply called as other banks. Now here, how I will recover loan from the customer, EMI, how I will recover? Lead bank may recover entire loan and distribute share to respective banks, or the customer may say, sir, I will pay all 5 banks respectively. Now tell me, is lead bank responsible if the customer defaulted to other banks? No. We are just a syndicate. I am only taking lead for administration purpose. Every bank will give loan to customer as per their own criteria. I am not compelling anybody. I am not giving guarantee on behalf of customer to anybody. Able to understand? It is just that customer came to me because I am unable to give. I am asking you to give. Don't give me based on me. Based on customer credit profile you give. If you want, I will collect EMI and give it to you. No problem. But I am not giving guarantee on behalf of customer. I am not giving security on behalf of customer. Yes or no? Now here, how NPA norm should be applied? NPA norm should be applied by individual bank based on their record of recovery. Example, customer is paying SBI on time. HDFC Bank is getting on time. ICI is getting on time. Indian Overseas Bank and Syndicate Bank, they are not getting on time. They are not getting on time. Like they both were defaulted more than 90 days. Now all 5 banks should treat this loan as NPA or only those 2 banks? Exactly. That is what this entire discussion is. Understood? Now consortium advances means advancing loans to borrower by 2 or more banks jointly. Yes or no? Usually the bank with higher share will lead the consortium. Advances should be based on record of recovery by the respective bank. Getting it? Where remittance by borrower are received by lead bank is not transferring to other member bank. NPA will be treated only for the customer. So it is customer responsibility to make sure the payment reaches every bank. Yes or no? So the banks participating need to arrange to get their share of recovery from the lead bank or get an express consent from the lead bank for recovery from the customer directly. Now, in case of consortium, how much each bank should give to the customer, especially working capital loan, drawing power allocation will be decided by lead bank. The lead bank will be responsible for computing drawing power and allocate the same to member banks. In special circumstances, at the request of customer borrower, the lead bank may allocate higher or lower share of drawing power to member bank as against share of advances. So drawing power allocation will be by lead bank. Getting it? Example, customer want some 50,000 crore working capital loan. Now my bank, I agreed 30,000 crore, remaining also agreed. Customer came and asked me, sir, ICICI Bank is charging high rate of interest. You please give me another 10,000 crores additionally, so I will take lesser amount from ICICI. Drawing power. So like that customer can come and ask. Next. Understood or not? Next. Agricultural advances. Agricultural advances. See, agricultural advances, we have 2 classifications. Here one, agricultural advances affected by natural calamities. So 2 classes were there. Now general agricultural advances NPA norm is this. You see, these all are special norms. 90 days logics and all we will not apply. Here we will apply that particular norm plus 90 days norm wherever it is suitable. Now, so agricultural advances, what is the NPA norm? First of all, whenever a bank is giving loan to a farmer, okay, they will give loan for crops. Getting it? Now, these loans are broadly classified as 2 types. These loans are broadly classified as 2 types. Short duration crop loan, long duration crop loan. Long duration crop loan, short duration crop loan. Now first of all, what is a long duration crop? If the crop season is longer than 1 year, it is treated as long duration crop. Remaining crops are short duration crops. And tobacco, all these are long duration crops. Vegetables, bananas, all these are short duration crops. Many fruits and vegetables are short duration crops. Now, what is the NPA treatment? Suppose if a farmer has taken loan in respect of long duration crop, right from plantation of seeds till the harvesting is the loan duration. After harvesting, he should sell and then repay the loan. Then it is treated as in time. But customer, the time is over. One more season also passed away. I gave loan, one season over, another season also passed away. One season means the crop season. Crop season over, later one more season also over. Suppose a long duration crop is treated as NPA if it is overdue for more than one crop season. A short duration crop loan is treated as NPA if it is remain overdue for more than. Are you clear? Suppose this is the general NPA norm which I will apply. Suppose by the time of harvesting, the customer has to repay, a big natural calamity was affected. Entire crop has been destroyed. The farmer went into loss. Now, what should be the NPA provision? Should you apply the general standard one crop season, more than one crop season, more than two crop season? Do you apply that norm? No. Here, what RBI says is, if at all any loan was impaired because of the calamity, banks may decide their own relief measures. And NPA classification would be governed by the new terms and conditions, whatever banks decided. What banks may decide? They may convert a short-term production loan into a long-term, or they may reschedule repayment period, or they may give a fresh loan. In such case, NPA norms will be governed by the revised terms and conditions. More than one crop season, more than two crop seasons, that logic we will not apply. Understood or not? Next. This one. Accounts where there is erosion in value of security or frauds committed by borrowers. What is the NPA norm in case of frauds committed by borrower? Like this they'll ask. What is the NPA norm where there is erosion in the value of security? Anyway, they can ask this question. So what is this exactly? I told you, loan will be granted based on 1. Repayment capacity, 2. Value of security given by you. Yes or no? Value of security given by you. Now, the security value bank has to periodically assess. Bank has to periodically assess the security value. See, NPA norm is first criteria is what? Based on record of recovery. As long as you are repaying regularly, NPA norm may not apply. If at all you are defaulted, more than 90 days default is there, we will straight away treat it as NPA. So based on record of recovery, NPA provision will apply. Not only that, NPA provision may apply in one more scenario. The NPA provision will attract in one more scenario. When? If the security value has steeply came down. The security offered by the customer, the value is went low. It went low too steep. Customer is paying regularly, no problem. With regard to repayment, no problem. But remember, I didn't give him loan only based on his repayment ability. I gave him loan based on the security given by him. Yes or no? So, even when he default for more than 90 days, that is one way. I will treat it as NPA. But if there is a security valuation came down, that is also one more way I will treat it as NPA. What is it exactly? Suppose customer got a housing loan in one locality. He constructed the house. And that house was constructed after a few days because of the environmental changes. That locality was treated as a flood prone area. That locality was treated as a flood prone area. Naturally, all the immovable properties that were there in that area steeply came down, the values. The customer house was actually 10 crore. Bank has given 8 crores. Immediately after 1 year, where the outstanding loan was approximately still 8 crores. After 1 year, that locality, the house, so at the time when the house was constructed, the value is 10 crore. Based on this, I gave a loan of 80%. Later, after 1 year, that area was treated as flood prone area or something. like it is not useful for households. Like that they certified the area. Now the value of the house came approximately to 50 lakh rupee. It came steeply down to 50 lakh rupee approximately. Now what is the value of security now? 50 lakhs. What is the loan outstanding? 8 crore. Is it not even 10%? It is not even 10%. If the value of the security given by the customer is less than 10% of the outstanding loan amount, then that asset is to be straightaway treated as loss asset. Sir, he is repaying regularly. It's okay. Let it be. Be conservative. Security is no more. Getting it? If at all tomorrow he stops repayment, that's it. We don't have anything to recover. Right now, treat it as loss asset and charge it off. Write it off to P&L. Understood or not? Now, suppose no. Customer, we gave a loan worth of 8 crore because the value of the security last time when we inspected was 10 crore. Now, after 2 years, we went and did once again the valuation. Now the valuation was 4 crore. Last time when I valued is 10 crore. Now when I valued again, it is 4 crore. More than 50% of the previous valuation. Current valuation is less than 50% of the previous valuation. If value of the security was less than 50% of the previous valuation, then also treat it as doubtful asset. If it is less than 10% of the outstanding loan, loss asset. If it is less than 50% of the value previously assessed, doubtful. That's it. That's a provision. So erosion means what? Destruction, diminution, which is not prudent. It should be straightaway classified as doubtful or loss asset as below. First apply loss asset criteria. If it does not satisfy, then come and apply doubtful. If that is also not satisfied, happy, leave it. If it is satisfying loss asset criteria, will you again apply doubtful asset criteria? No. If the realizable value of the security as assessed by bank, valuer, RBI, whoever it is less than 10% of the outstanding in the borrower account, then existence of security, please ignore, and the asset should be straightaway classified as loss asset, which means it should be fully written off. Are you clear? Are you observing how I am reading? Every word I put significance. Every word I stop and understand and then go further. Yes or no? Next. Suppose if the realizable value of security is less than 50% of the value assessed by the bank or RBI at the time of last inspection. Last time when we inspected, whatever value. Now when we inspected, what is the value? The difference is difference is more than 50%. Such asset may be straightaway treated as doubtful. Apply provisioning norm, whatever applicable for doubtful assets. These are special NPA norms. Understood or not? Next, how to do audit of advances. Here they will check whether credit worthiness has been checked, documentation has been checked, end use of funds. See, this is nothing but the auditor should examine efficacy of controls over advances. What internal controls bank will check, bank will apply. They will ask you this question straight away. It's an easy thing. If you're ready, you can understand. If you read it, you can understand it very simple because all these technical terms we covered now. Okay. Now, how to audit bank incomes? First of all, remember, if there is uncertainty regarding ultimate collection, bank should not recognize income. Getting it? Which is non-performing asset until it is actually realized. Suppose when a credit facility is classified as NPA for the first time, interest accrued and credited to income account which has not been realized should be reversed. This will apply even for government guaranteed advance, because government guaranteed advance principal we will not treat it as NPA. Interest we will treat it as NPA. Now whatever interest you are treating it as NPA, no. That interest, no, we will transfer, bank will record that accrued interest in memorandum account. And once interest is realized later on, we will transfer from memorandum account to actual P&L account. Yes or no? In society's audit, Overdue interest shall be credited to overdue interest reserve account. Similar to this. Getting it? Same way, bills purchased. Suppose I am a customer of a bank and I sold goods. I gave bill. That customer has to pay me. But customer agreed to pay me after 90 days. I went to the bank and gave this bill. Whatever goods I sold, that bills I gave to the bank. Bank asked me, you want me to collect and then give it to you later, or you want to discount it now? I asked for collection. Collection means what? Bank will wait until maturity. They will go and collect from the customer and they will pay me at the time. Now, for this collection, bank will collect a commission or collection charges. When should the bank recognize the collection charges? Whenever the bill is actually collected and credited to customer account. In case of bills for collection, the auditor verify that what is the procedure for crediting the party. The customer account should be credited only after the bill has been collected. Even the commission will become due only when the bill has been collected. So commission should be recognized as income of the year in which it was collected. Understood? Next, bills purchased. Bills purchased or discounted. What does it mean? Now customer came 90 days before he came and asked me, please give me the money. Later you collect from customer. For this 90 days, opportunity cost of interest I will discount. And I will give you balance amount to the customer. Now customer transaction is settled with the debtor. Now the bank will have to collect from the debtor full amount of the bill. The margin is the profit for the bank. That is called discount or nothing but interest income. Now how should bank recognize this interest income? Proportionate to the time period. Suppose bank discounted on 10th March. Whereas the bill is due on April 30th. Now for this 40 days, bank will collect interest. Nothing but bank will charge discount on this. Only balance amount will be given to customer. Now 10th March 21, 30th April 2021. This falls under 2021 financial year. This will fall under 21-22 financial year. Bank is getting discount related to these 20 plus 30, totally 50 days. 50 days worth of interest bank is enjoying now. Now this 50 days worth of interest should be accounted in which year? Proportionately. 20 days interest you will account in March. Balance 30 days interest you will account it in April. That is what here they mentioned. Interest component paid by bank on rediscounted bill is not netted off from that. That's different. In case of bills purchased outstanding at the closure, discount received thereon should be properly apportioned between 2 years. Are you getting the point? The unexpired discount rebate, where part of the discount charges is related to year end, beyond year end, should be recorded as other liability. Because that is a discount now recognized, but not related to this year, but related to next year. Income received in advance, something like that is a liability. Understood or not? Next. Now that's regarding main interest income. The above points are very simple. Interest on sale of NPA, reversal of income, that is also similar. That's what we have already covered. Suppose a loan is treated as NPA. Until the loan become NPA for the next 90 days, bank recognized interest in P&L on accrual basis. But only on 91st day, bank came to know that became NPA. Now what 91st day bank shall do? Whatever interest already recognized on accrual basis but not collected shall be reversed. That's what this point is. That's what this entire point is. Able to understand? All of you? That's it. Now there is a term called takeout finance. Takeout loan is a method of financing whereby loan that is procured later is used to replace the initial loan. More specifically, a takeout loan or takeout finance is a long-term financing that lender promises to provide at a particular date. What is that simply? Takeout finance means, suppose I purchased a car using a SBI car loan. Originally SBI gave me the car loan, I purchased it. After 1 year, 2 years, ICICI Bank called me. Sir, we are charging lower rate of interest. Okay. So if you transfer the car loan from SBI to here, we will give you lower rate of interest. How do I transfer? I will not transfer. ICICI Bank will give me money. I will repay to SBI. Nothing but until then loan is with SBI. Now it is taken over by, that is called takeout finance. Now you read it, you will understand. Understood everyone? And audit of expenses of a bank is also a very easy thing. Interest expenditure is only the only important. Remaining are general for every organization. Remaining are general for every organization. So almost we spent on bank audit 1 hour 15 to 1 hour 20 minutes. Thoroughly discussed all the topics. Understood main topics we have covered. But remember, whatever I am covering in revision, not only that is important from exam point of view, everything is important. Always remember, when I say ignore 3-4 chapters completely, no problem, but remaining chapters 100% you should study. From each chapter if you study 80%, if you are bad luck like last attempt, getting it, all the questions will come only from the balance 20%. That's it. Every chapter we left to 1/4, and all 1/4 questions only game. Gone. So what is best and safe strategy? Always leave 1/4 chapters. Study 3/4 chapters. Definitely from 1/4 chapters they will not ask questions. Entire bank audit will be tested 50 marks in paper. Always 6 or 10. So if I leave 4 or 5 chapters in my complete preparation, remaining 10-12 chapters if I'm perfect, definitely from that 75-80 marks will come for sure. And if I answer them perfectly, I can even score exemption. Getting it? That should be the way. Anyhow, you will leave 25% syllabus in every chapter. Instead of in every chapter, leave 25% of chapters I'm asking, which is safe strategy. You know, all India rankers will on an average attempt for how many marks? 85 only. You and all can attempt 110. All India rankers, they are not that intelligent. They attempt only for 85. You can see their interviews. Hardly they attempted for 85, 90. Remaining they didn't attempt, not because they don't have time, because they don't know. Getting it? For a student who really learns entire subject, that 3/4 paper thoroughly, for him 3 hours will be enough. In fact, he'll have some time left. For a student who don't understand anything, he needs 5 hours time. Getting it? The problem is only for the medium, those who are in the medium category, not either that side or this side. Getting it? So don't, those who did not study at all, they will give the paper after 30 minutes. Those who studied really superb, they will finish exam before 30 minutes. And remaining people will go up to 5:30. Understood? So even if you are studying 3/4 syllabus, be perfect in the entire chapter. Never ignore a single concept in any chapter. Getting it? That should be the best method. You see, bank audit, almost I covered. Sampling, except some 3 or 4 concepts, I covered almost. But you need to cover 100%. Just because I ignored in revision, because it's revision I ignore. You should not ignore. You are not practicing on a sampling basis in exam, no? Correct, huh? That's it. So with this, bank audit is done. Satisfied until now? So whatever chapters that I am covering in revision, whatever topics I am covering in revision, they will give you a very decent command in order to prepare the entire chapter. If you observe, in every chapter, the gist of the chapter I clearly explained. What is the outcome of the chapter also I explained. Getting it? If you observe, initial 2-3 chapters I go little slow. Why? Because they are very basic, fundamental. If you don't understand that, later you can't understand at all. Now you know, wherever I am talking about a further topic, if at all evidence is not available or evidence is available, you can able to relate with always ultimate impact on the report. Getting it? So that's why we gradually increase the speed. If at all we have to discuss in the same slow pattern, it will take 45 hours to revise, which is not enough. Getting it? I hope sampling, whatever you see, I hope I covered in depth. Even fraud also I covered many topics which you have not studied till date. In the revision class, I think I might have showed you the concepts which you have not studied till date. Agree? And remember, these are all part of the syllabus. These are all part of the syllabus. So whatever book you are reading from, be careful. So there is so much in the syllabus. Last time and before that time, all in the past 3-4 attempts, the students, the problem with the student is, forget about writing answer, he is not understanding question. Last time one student sent me a message and asking me which chapters are this question. Honestly, that's how the papers was. So unless you read the entire study material, each and every line, why to that extent, those of you who ever feel very good in audit, don't practice anything. Open icai MCQ booklet. Open case-based MCQs. Start solving. You will realize your audit skills. Understood? So now after revision, once again the chapters whatever you thought of leaving, except that, rest all other chapters be strong. 100%. I am telling you, you can happily, confidently leave audit strategy chapter, because in audit strategy, there are 6 topics. What are the factors to be considered for developing an audit strategy? What are the advantages of audit strategy? What are the factors to be considered for developing audit plan? What are advantages of plan? What are the points to be considered for developing audit program? What are the advantages of audit program? All the 6 questions, if you read the answer, they look similar to each other. They look similar to each other. You will feel like Gajini moment. 2 people will be there at the end. Yeah, both look similar. The entire answer looks similar. In reality also, we will not have strategy plan program separately. We will have one document inbuilt of everything. But in book it is discussed separately. Getting it? So this chapter, risk assessment, internal control, gives single reading. Based on now whatever we discussed, I told you about risk assessment. Example I clearly explained what is exactly risk assessment while starting documentation chapter. Thoroughly explained the example. Getting it? So keep that in mind. And with that, read the risk assessment chapter. If possible, when you will read risk assessment chapter, only after you finish remaining all other chapters. Understood? So what are all we completed now? NOS audit, company audit, audit report, societies audit. This entirely occupies 35 to 40 marks. 35, around 35 for sure. 30 to 35 for sure. Including MCQs. Including MCQs. Then we have documentation, fraud, sampling, bank audit. Another 25 for sure. Getting it? Now you see, in exams also, we are only having 56 marks worth of descriptive questions. And we are having 44 objective. True or false questions as well as MCQs altogether. Risk assessment, audit strategy, these chapters you give single reading in order to secure 44. Out of 44, your target should be 30 plus. Minimum. I am telling you conservative target. 30 plus should be your minimum. Out of this 56, entire theory paper, please try to score 25. I am not asking you to put so much. This entire 44, 30 plus you can score only based upon pure conceptual understanding. Getting it? Whereas this you can score only if you reproduce the content. Getting the point? Now, through revision class, I think you might have understood conceptually the entire subject. What is there in the subject, what is not there. Getting it? How much you need to study, how to understand. I think now you understood. Later in your preparation, apply all these techniques, whatever I applied in this class, and get a complete command. So 30 plus securing is quite easy. Whereas to secure this 25, you have to do 2 revisions. How you should revise? Just reading slides, like suppose in case of takeout finance, if based on record of recovery, account is classified as NPA, by that kind of reading is not enough. You need to understand each and every word. If you understand and read twice, naturally you remember. See, today, after listening to these classes, I think now especially sampling you see, or you see documentation topic, or you see reporting topic or societies audit. We read and understood thoroughly. Now if you read them, you require less efforts to remember. Substantially lesser efforts. You don't require much effort to remember. How I remembered? Is it because I read it twice, many times? No. It's because I understand the content. The moment I think of NPA, I think of there are so many classifications. I think of how it works. So I naturally write entire the terminology. If you also understand, you can reproduce well. Only reason why you are unable to write well is because you didn't understand. It's not you didn't remember, it's you didn't understand. If you understand it thoroughly, this is the clarity you require. Clear all of you? That's it. Okay. So scoring 25 plus in entire theory paper and 30 plus in objective paper. So this is a minimum benchmark that you should keep, 55 plus. Only above that you should target, which is easy also, correct? Huh? That's it. So take care. We'll continue in the next session. What are the other topics that we have still? Analytical procedure, government audit, items of financial statements and standards. Yes, we can successfully finish in the next, we still have tomorrow some 6 hours, out of which 5.5 effective hours, and that next day 1.5 to 2 hours, total 7 hours. Yeah, I think it is absolutely enough. Getting it? That's it.